Good morning, everyone, and welcome to the European crossover webinar. And as you see here with the note, we're going to have our new starting time, which starts Monday. And also, if you notice a little bit of a difference now, I've gone and moved into the trading view because a few little tweaks as we move into the European session. Want to go on and be able to catch some other markets like the Nikkei 225 and maybe possibly the FTSE and its impact in the morning. Another thing also is in the European crossover webinar, we'll also be looking at some cross rates too. We never look at the euro pound, but there'll be some other cross rates we'll be also looking at, and I'll be using your input to look at those. So I've gone and switched over to trading views so that we can go on and be able to go on and look at some of these other European markets at the same time. So I think that'll make it a little bit easier. Another tweak will be that we'll be using the XAU on the bias chart, but we'll go on and also reference the difference between that and the futures. Right now, the December futures are trading at 1246.80. And you can see here we're at 42.5 or 42.35. So essentially a premium on the Fed futures of about $4.50. But it'll be easier using this to go on and take a look at this on a, looking at it on the XAU. So we'll take a look, and I said I've got a little bit different setup. And I'll just go through pages. Here's on the cable, obviously the dollar yen here. We'll work on each of these, but we'll get through it, like I said, but I think it's going to be easier for me to cover some of these European markets, using the trading view. And here's the goal. Once again, like I said, we'll be looking at the XAU going forward, but we know that the premium right now between that and the futures is about $4.50. Fed futures are trading at 1246.50. XAU spot 1242.06, essentially $4.50. Well, let's go and take a look, a quick look with the euro. See, I was just there. There we go. That's most of the levels put up, but we'll go, like I said, we'll get assimilated to this. And then we'll move into the news stories and we'll go right into the bias chart. Obviously, it's ECB day. We did go on and come off of these lows here on the euro. We're looking at the 2-hour chart. Now, generally, we'll look at the 2-hour. One good thing about using the trading view also is we already have the daily chart up here on the far left with the 2-hour, which I use for my longer term outlook. And then the 30-minute with the exponential moving averages here. And also you look at the cash dollar index and gold. And as I mentioned here on the gold, we'll be looking at the XAU. Right now, the February futures are trading at a $4 premium, $4.50 premium essentially to the spot. Okay. So let's go and take a quick look here with the euro, which did come down here, and we were able to successfully defend, and we saw the dollar going and pair back, and we'll jump quickly back here on the dollar. Take a while before we get all fully assimilated, but we will. Well, we made up this move here in the cash dollar index, and one of the key things that we looked at was on the daily, we got above that 97.11, remember? And that was key. Actually, it's 97.14, and we had 97.10 was pretty key yesterday, and we actually made a run back up in here, and we turned around. I remember Joe was actually mentioning that, hey, we're below 97. I think we were at 96.99 at the time, or 96.98. But like I said, we made this run up in here and did a lot stronger than what I had even expected here on the cash dollar index. And finally, we started to tilt back, and we're looking here now. Let's go on and quickly move this over to a 2-hour chart, which is what I usually like to look at. And you can see here that we had a nice little gravestone doji here on the 2-hour. Finally, we started, and that was actually from the day before that. And finally, we started going and give back some of this. And you know, it was kind of like a little bit of a stretch here in the cash dollar index at the time. Wasn't sure if it was going to try and break higher, but certainly that daily close above 97.14 certainly had things up and moving. But we talked about the two key levels here yesterday, which was the 97.14 on the daily, but also 97.40, and whether it was going to go and be able to maintain that. And we started going and slide back, and that opened the door for us to slide a little bit further. If you look here, now we finally started going and slide back, and not only did we lose the 97.40 yesterday, we also lost the 97.14 on the daily. I'll take a look at that quickly. One thing I like about the trading view is, and I mentioned that to the guys in the room, wow, it's fast. It's very, very fast. But as you mentioned, as you can see here, not only did we lose the 97.40, we also lost the 97.14 yesterday. So we got today's big ECB day, and we'll see how things go and play themselves out. Let's go and move this back to the 2-hour. And the thing is that things are still looking bullish. I was able to get out of the dollar CAD yesterday with the gain, but one of the things that we had talked about, and I had gone and sold that thing, was a couple of days before on the run up, is that even though we had a real nice pullback on the daily and then we snapped back and looked like a good area to go and sell into, is that on the weekly it was still bullish, and so it kept that upside momentum. So let's go and move this back in here. Kind of like I said, just giving a quick overview of the dollar. Like I said, things are a little bit set up differently from my other charts, and I'm going to be experimenting with this where I switch over to the cable, the yen, the Aussie, or maybe have one page that kind of reflects a little bit of everything, but we shall see. Going back here with the euro, though, we were able to go on and get make a run here. Now, one of the things I did point out yesterday was in the chat room, and we actually got into there. We failed right before it. We came into it, and I'm hoping some people had jumped out. I mentioned about 113.83 being a pretty good volume area here, and that turned out to be, you know, we actually at the market actually stopped at 13.79, backed off, reasserted itself, and looked like it was going to take off. And I mentioned the same thing right when we were actually making these highs, and we had started to pare back. I myself was flat at that time. I wanted to just be flat of everything. Like I said, I came in a little bit too early selling the dollar, but things overall worked out okay. Was even able to get out of my dollar yen, add a little bit yesterday morning, and snake out of that thing. And I was glad to be out of it for now. But we shall see if we can finally get a turn here in the dollar. So let's go and move back. We'll take a look here with the cable. We certainly have made a pretty good run up in here in the cable. And boy, did we go on and make a pretty good run here. We're looking here on the 30-minute. We actually come up here to this 2680, actually as high as 2686. Remember, 2694 is that big, huge area. I don't have it marked off here. I haven't had a chance to mark off my charts, but here's that big area, 2694 here, right there. So we said that, hey, we could make it all the way to 2694, and it would not change the complexion one iota. And it certainly hasn't. And if you look at it here on a 2-hour chart, so it looks like it could have gone and weakened a bit in here. We'll see. And let's take a look where the dollar yen stands. And we'll be tweaking these charts to see what best works. Well, like I told you, I'm glad I'm out of this dollar yen. I got pretty lucky too. I was actually trying to catch this all the way down to 14 at the time, but I was able to go in and get out of it. I think it was 17 I already added a little bit, so I'm pretty happy with able to get out of that thing, because certainly this thing is just holding up like a champ. We also even have the T-bond futures on this, but they're in a little bit of a delay. I could pull up take a look at something with the actual prices on the 30-year. I like to look at the 30. It's 143. Well, not bad. Here we got 142.31. And know that I like to look at the T-bonds, not on the 2-hour, but actually it's one thing that I do like to look at on the 4-hour. There we go. Aussie dollar is finally starting to work up a little bit higher, coming off of these lows. Canadian dollar. Oh my goodness gracious! I am so glad I got out of this. I tell that in the room though, we had some. I think our bias chart support on a little bit lower was like 33.35, but I mentioned some. Boy, am I glad to have gotten out of this. 33.43 was at key daily. Remember here on the dollar CAD, and boy, look how we have rebounded right back. Holy smokes! But this is only on a 5-minute chart. So let's go on and get back here to the euro, and we'll go on and cover the news for right now. Obviously, it's happy ECB day. Canadian dollar climbs as investors dump the greenback for riskier assets. The Canadian dollar strengthened against its US counterpart on Wednesday as the greenback broadly declined, and the stocks got a boost from optimism over trade negotiations between the US and China. The dollar, the index declined against a basket of major currencies. Expectations that British Prime Minister Theresa May would survive a no confidence vote on her leadership help boost the pound. What we're seeing is the Canadian dollar strengthening in an environment of broad-based US dollar weakness, said Eric Thierry, currency strategist at Scotia. In an environment of risk appetite, you typically tend to see the dollar weaken as people get out of the safe havens and into riskier assets. US stocks jumped about 1.6% on Wednesday, bolstered by the technology sector as signs Beijing would ease its Made in China 2025 industrial policy, add to the optimism fueled by President Trump's upbeat comments on trade talks. News on Tuesday that a top executive of Chinese telecoms giant Huawei Technologies was granted bail by a Canadian court, helped boost to the sentiment. Canadian exports, mainly commodities, including oil, runs a current account deficit, so its economy stands to benefit as the outlook improves for global trade flow. And moving on to the Australian dollar, we did see those weak, move up a little bit higher finally. The Australian dollar held near a 1-week high as riskier assets were boosted by a sign of progress in Sino-US trade relations, while New Zealand's currency was steady as the government unveiled a healthy budget. But most of the action in the Forex world was in the pound, with most of the other currencies bystanders amid the high political drama in Britain, where Prime Minister May survived a no confidence vote on her leadership. The Aussie dollar was last at 72.17 against the US dollar after going as high as 72.38 on Wednesday. Sentiment was boosted by China, who bought over 1.5 million tons of US soybeans in the first major soybean purchase in more than 6 months. President Trump has said that trade talks with China were progressing, also helping risk appetite. China appears to be easing its high-tech industrial development push, dubbed Made in China 2025, which has long irked the United States. Positive headlines have been rolling out of the China's-U.S. negotiations, suggesting it may squeeze higher in the short term, ANZ analysts said in a note to clients, but the bias is to sell the rallies. The Australian dollar seen as a gauge of risk sentiment because the country's healthy, dependent on the world trade in China. And as far as the New Zealand, the Kiwi wobbled at 68.85 to stay near a 2-week trough at 68.25 set on Wednesday. The forecast continued to show the economy growing at or near its historical average, says Nick Tuffley. The net debt track was also a steady choice decline over the forecast period. The government has kept its fiscal powder dry. Fiscal accounts have room for modest increases in spending. And moving on to the pound. Well, actually, the euro edges up on the Italy boost as traders prepare for the ECB. The euro rose slightly in early trading on Thursday after Italy said it would cut its budgetary spending plans in a row with the European Union, although traders were in a cautious mood ahead of the ECB's policy meeting. Global markets were mostly positive at the start of the day on signs of easing U.S. trade tensions. Alvin Tanner, strategist at Societe Generale, said that news that Italy was cutting its deficit target was disappointing in the euro, and it would help diffuse a dispute with the European office in Brussels. While the ECB is set to announce formally to end its vast quantitative easing program at a policy meeting later on Thursday, the move will be tempered by the central bank expressing caution about the outlook for the economy. TAM predicts the euro dollar will remain in a tight range until early 2019. Euro dollar has been trapped in a range, and there are very strong cross currents in macro and economics On one hand, the U.S. growth is slowing. On the other hand, we have a situation where European political risk remains large and a cautious ECB, referring to the risk around Brexit, Italy, and French protests. Investors are hoping to find out whether the ECB will start raising rates before ECB President Mario Draghi's term ends in October of next year. Everybody wants to have a hint regarding whether the ECB will raise rates next year, but that probably will not happen, said Yukio Ishizuki. The dollar index has suffered in recent weeks after an 8-month rally as investors curbed their expectations for the Fed policy tightening in 2019. Elsewhere, sterling was a big story after May was fought off a bid to unseat her by her colleagues. After rallying ahead of the result, the pound was mostly unmoved by the result as the relatively narrow margin of victory underlined the extent of the opposition. May heads to Brussels on Thursday for help in trying to sell a tweaked version of the deal to her colleagues. The yen shed 0.2 to 13.46 as a positive mood in Asia weighed on the currency. Many investors buy when nervous. And the Swiss National Bank kept its ultra-loose monetary policy. Speaking of the Swissy, because like I said, it's going to be relatively slow as we come into the ECB. We'll just be looking at those ranges. And since sterling rises after PMA survives the vote, we've already pretty much touched all this news, but we did put in here the pound gained against the euro and the dollar moved away from the 20-month lows. But traders said that only reflected relief in the market. It's highly unlikely the Brexit agreement will make it through Parliament, whatever tweaks may can wrangle out of the EU leaders. A win for May on Thursday had largely been priced in, and markets are now turning their attention to her struggle to get through the deal through Parliament. Most investors still think the British Parliament will eventually back a softer Brexit rather than a clean break from the EU, although nervousness about the outcome has left the pound trading within tight ranges. And on to the Swiss National Bank that keep policy loose and cuts inflation outlook. Swiss National Bank kept its ultra-loose monetary policy in place on Thursday, citing the fragile exchange rate situation. Surveys indicate that trade tensions have prompted companies to reassess their investment plans and value chains. As far as the Brexit is concerned, uncertainty remains high following the postponement of the vote in the UK Parliament. The tension surrounding the fiscal policy also persists, SNB Chairman Thomas Jordan told a news conference. All those risks could lead to turbulence in the financial markets and jeopardize economic growth. The central bank also kept in place a negative interest rate at minus 0.75%. It charges on deposits held by commercial banks above a certain level. The SNB has used both measures to prevent appreciation of the Swiss franc, whose strength has posed problems for the Switzerland's export-reliant economy. Overall, the Swiss franc is still highly valued, and the situation of the foreign exchange market continues to be fragile. With the revision of the inflation forecast, the SNB seems more dovish than before. The normalization of monetary policy is not for now and may not happen for years, ING economist Charlotte Montpellier said. It looks more like as if the SNB is going Japanese, and it would take a long time before the first rate hike. We do not expect any rate hike before March of 2020. The SNB saw the Swiss growth slowing to 1.5%. Central bank is widely expected to wait until the ECB starts raising its deposit rate. And finally, just wrapping up some economic news here. Germany's IFO Institute slashed its growth forecast for Europe's biggest economy. So that's something to keep in check in if we see a rally here in the euro, how far we're going to be able to go. Saying problems affecting the car industry would last until 2019. Germany's economy is cooling as exporters are feeling the impact of weakening global growth. It sees growth picking up in 2020 to 1.6%. German car makers are struggling to adjust to new car registration rules. The period of weakness triggered by the auto industry will drag into 2019. In addition, business uncertainty caused by President Trump's America First policy, disputes about higher tariffs have hit exporters. Trade conflicts, emerging market currency turmoil weigh on the global market. The postponement of Britain's parliament, we already know that. However, the German government's plan to lower income taxes, increase benefits for children, will give the economy an additional boost next year, the ministry said. All in all, the German economy should perform well in this difficult environment, it said. On Tuesday, the German government cut its growth forecast for this year to around 1.5 to 1.6 from a previous estimate of 1.8. Domestic demand has become an important growth driver for the economy in recent years, helped by low borrowing costs, record high employment, and inflation busting pay hikes, providing a buffer against external shocks. And lastly, we'll finish up with the gold. Gold price is flat as the dollar steadies and equities tick up. China here appears to be easing its high industrial development push. There's also a lackluster movement right now, said Kunal Shah, head of research in Malbank Commodities. Gold is waiting for a trigger from the upcoming FOMC market meeting, and the market is expecting a more dovish signal from the Fed. Spot gold prices look range are neutral from 1240 to 1253, and the Fed is widely expected to raise rates. So we'll move into the bias chart now. And as we get ready for the new move to the European crossover to be now at 4 a.m. Eastern, one of the things we'll be moving over here is in the gold. We'll be looking at the XAU versus the actual futures, but we will quote the spread. So currently, we saw the spread between the XAU, which is right now at 1243.54, and the Fed futures about $4.50. So let's go and move in here to the euro. Let me put this here. I don't know if we move it. Yeah, sure enough, it does knock it out. Okay. One moment. There we go. I actually think if we do it this way, okay, there's one way to do it. So taking a look here on the euro on the daily, we've talked about this before with this 1402, but we have to have a bigger look as to where we may go, and that's really going to come in right here, which is 1470. So if we're going to do anything on a daily close, it's going to be 14. You can see it 1469.7. So it's going to be 1470. I think that the euro has the opportunity to go in and rally. The problem is I think it's going to be more of the same thing, the 3 steps forward, 1 step back, and then probably the next day, 2 steps forward, 2 steps back, and then we start to decline back again. Possibly, we'll see how the dollar. Obviously, the dollar is really holding up. Is holding up very, very well. I mean, I wouldn't have thought it would continue to hold up, but it has. And the closer we get to year end, but I guess with the FOMC, maybe they're not in any rush to push it lower. So when we're looking here on the resistance initially, we're looking here at 1438, but I think that's so obvious. I think they would blow those stops there. And so the resistance here actually comes in at 1458 on the 2-hour chart, 1458. See what kind of reaction we can go and get. Beyond that would be 1491. Yeah, actually it's 1492. But for now, for stars, it's going to be 1458. And key would be if we could get above 1470 on a daily. Now for support. Support's going to come in right there at 1340. You can see all this volume coming in right here. Yeah, the concern would be if we were to go back down, that really would open the door for us to slide all the way back down. And the news coming out of Europe is not that bad now. I mean, Italy's looking to cut back. That actually gave us that run up in the euro yesterday. And some things are starting to turn around a bit. Maybe not a whole lot to send us running up like crazy, but I think it's enough to quell the selling. So I think any dips back here towards this 1340 would be supported. And you can see right coming in across in here. So we'll say 1340. 1340 on a bit of a disappointment. If we were to get a 2-hour close below 1340, that really opens the door now for them to test even lower. But initially, if you're looking, so we'll see how it plays out. But if we were a slide back, you'd be looking at as initially 1340 to be defended. Now, whether or not that were to give way and then that become resistance would be different. But for right now, you'd be looking at 1340. Right now, you can see here with the exponential moving average, has been on a buy mode. And this has really helped me, because right now, as we all know, FX has certainly been somewhat challenging, and some of these moves don't last very long. So this has kind of tilted me in the right direction and just kind of kept me, if I start to see things start to go and change, okay, great, then I can just react or at least get the heck out of the way. So we've been in a buy mode. Actually, we flipped the switch over here yesterday, very early in the morning, European session, and we've continued to work kind of push higher. Right now, like I said, we'll see what happens after ECB. But for now, like I said, we're certainly in that buy mode, which would encourage the defense of that 1340 for now. But we shall see how this plays out. Let's go and move into the cable. We talked about this. This is 2694. That's that one area they've been talking about on the way down here. Back here, I remember that being an area here. And a nice rally and the pushback here, the 2694. Before we kept saying, here's the 2564 we had mentioned. Obviously, the market eventually got there, went past it, then dip even below 125 before, screaming right back. Basically, nothing more than a relief rally, if nothing else. But 2694 is huge. So we're not that far away from it. If euro dollar were to pair back, could we get past it? Yeah, I think we could, but it could be maybe just a little stop run. So we'll put the resistance coming in right there, which isn't even that much for we'll call it 2703. 2703. On the daily, huge resistance would be right there. I'll pull this back, make it easier to see. 2713. It'd be pretty big if they could go on and get beyond that. on a daily close. And you can see here on the exponential moving averages, we flipped the switch right here, and from then it's been quite the upside. Looking here on the 2-hour for support, there it is right there, 26.16. Right there, 26.16 for support on a short-term basis. And if you look at this slow moving average back here, let's see, 26.16. And let's go moving now to the Aussie dollar. We know how important that 71.86 has been. We actually been marking it to 71.80. I haven't had a chance to mark this down. But boy, it's had a tough time trying to move higher. Very tough time. Support on a short-term basis, we just call it right there, 72 cents. 72 on a short-term basis. And that 71.73 is key on a daily close. On the upside, and 72.75 also key on a daily. You can see it right there. Yeah, and I think that's going to be it. We'll take a look at it here on the 2-hour though. There's a little bit here at 54, but this market is so oversold that you have to be realistic and figure they would at least be able to come up to 72, 75. So that's going to go on and stay in place here. On this closing basis, as well as a 4-hour chart right here. And we're going to go and keep it remain as a range. And we'll go and take a look here with the Kiwi. Okay, well, I like how responsive this trading view is. I hadn't used it, but it is fast. And there's that 68, 44, 45 right here. Boy, this market is languishing here. And this we're going to go and keep it here, 68.45. And 68.35 is huge on a daily. And I tell you what, it's not doing so well. And the resistance is going to remain right there, 69.05. No changes. Yeah, they announced a very good budget outlook, and we didn't get much of a response off of that. Why one of the reasons sometimes you want to listen to the news just to see the tone. So you get a real good budget announcement outlook, and look, the market doesn't even do much of anything with it. You would have thought that it'd been up there and maybe goose some of these stops, and the market's really having a tough time here. But the thing is that it has outperformed the Aussie like nobody's business. So maybe it's going to have to come back in for some realistic expectation. That may take us down here potentially towards the 67.50. But, not responding to that good news is definitely a sign of weakness here. So the key, we were going to go and keep the same. If it could squeeze up, be 69.05. It's still bullish. There's no doubt about that. But it's certainly going to, if we lose too much, it's going to start to slide into a range if we lose about another 50 pips. Now let's go and move into the dollar CAD. Well, sure, I'm glad I got the heck out of that thing. With a gain at that. So I felt fortunate because look, here we are. Oh, gone now, 33.70. This is one of the things that we point out. I want to, we were looking at this. Remember, we had that pretty good pullback on Friday, okay? And certainly looked like, boy, this thing is, open to go on and go weaker. But one of the things I was pointing out was if you look on the weekly, we still finished the week higher than the previous week. You see? So that really opened the door for them to even push higher. And that was my concern. Even though it looked good from a daily short, when you saw what had happened on Friday, the weekly still had the weekly momentum going with it. I thought it was really overdone. So I thought they'd come back. So I'm fortunate in that sense that it did just that. But I didn't want to get too greedy on that. We had our support. I think we had as low as 33.35. We'll take a look. Yeah, we did 33, but you see how I have the 43? That was the key daily close from before. And when we made that move down there, I was glad to get the heck out of Dodge. But we did go and dip lower. We actually came into the mid-20s before we turned around and started to make a move back up. And obviously, look, here's crude sliding back down again. And let me take a look at something real quick. Yeah, I've got the futures. Just want to make sure it's trading basically right there. If I've got 50, 52, and this was 50, 51, 54, 49. So this slide here certainly worked against the dollar CAD. Once again, like I said, I was mentioning to someone in the room is, when we made that run up there above 34, even though I thought it was overdone, hey, I knew I'm wrong. You know what I mean? So I was glad to get out at 33.43. We did move lower, but you know what? I said, you know what? I'll jump in. You shouldn't have to. Trading's not easy. It's certainly hard, but you shouldn't have to, and I'm talking about myself in general, you shouldn't have to come into a position and just struggle and struggle. My point being is if you're doing that, then you're on the wrong side of the market. Essentially, that was happening to me in the dollar yen. You see what I'm saying? Although that was going against you. But I'm saying like the dollar CAD, I mean, it's much better to go when you have the momentum going for you. So that's why I was glad to go and get out. And certainly look, here we are back up now, 33.60, 40 off those lows, and we're just in the 70s just a few moments ago. I'd rather see that momentum work for me. Finally, things started to turn around from the day before. You can see here as the exponential moving average started pointing lower, but at that time, like I said, I was already in the red. But it finally worked out okay. But the momentum from a weekly close is still higher. I'd like to see this thing really start to turn around. It looks like it's getting a little bit tired, but once again, I didn't have a good, although it looked like a good entry when I saw that dollar CAD get above 34. Certainly proved that it was not such a great entry. But anyway, getting back here with the dollar CAD resistance, where we're going to find resistance short-term basis. I'm looking at 33.80 here. Yeah, it's going to be right there. 33.86 is resistance. 33.86. Support comes in right there at 33.20, right here. And we'll keep an eye on that 33.43. And certainly it's bullish. You're still hanging around its highs, 13.80. And let's go into the dollar Swissy. We haven't seen that huge of a move if you think about it with the SMB. And they're looking at not even making any moves, or at least the thought is it probably won't see any moves until 2020, which is huge if you think about it. But on a very short-term basis, resistance is going to come in right there at 99.54. It has started to turn bearish. We had our support here at 99.32. Obviously, the Swiss National Bank, that pulled a little bit of a yank down, but we popped right back up in light of that news. Dollar was weakening, so that gave us our slide here. But now the Swiss National Bank talking about a whole different other thing. I guess on a short-term basis, you can look on here, it looks like a little bit of a head and shoulders, but that's not after a rally. That's just after this oversold. It'd be different if we were getting something like that up in here after we've had a pretty good move. Support's going to come in here at 98.50. 98.50, right there. See that coming right across. And I want to hurry up and get done. We might kind of fly through the rest of the stuff. I don't want to run into Dale's time, and then the ECB is going to be coming, and I want to be out of the way. So let's go and quickly move into the dollar yen. So we've kept this movement up in here, and you can see here that even the exponential moving average is going that way. Also, after that dip, I got very fortunate, able to go and get out of that. It is holding up very, very well, and I don't have, I think it was Stellius, maybe Steve that was talking about yesterday on Face about the yen. They're like, you could find a whole lot better places to put your resources. And I agree with the same thing, because I don't see, it just seems like it's just treading water. But I'll tell you what, it was treading water with me on the other side. So I'm very fortunate to go and get out as we slip back. But, I'm not sure what this thing wants to do. It's just hanging around here. And we shall see. But I don't see anything here with this thing. It's just a whole lot of nothing for now. So I look at it here, upside. For now, it's going to be 1386. Certainly with that momentum going, it certainly dictates for this to move higher, or at least the resistance itself. Really got to get clipping along here. Support. If we do slide, it's going to be 1266. And that'd be a pretty good little slide if it does. Just want to have a general idea where we could go to. So let's move this down lower here. We'll see what happens after ECB. It's a little bit wide, but for now, let's hurry up quickly move into the cash dollar index. I'm just going to come back in here with the euro. I really want to get the heck out of the way before the ECB. And with this, using this new charting, I don't want to get stuck behind the. So let's quickly move into the dollar index. Well, we talked about 97.10 short-term basis. Yes. on a very short-term basis, but we have to get a little bit of room in case the euro were to, for some reason, start to slide back. So it's actually going to be there, 97.22 for right now. With support coming in right there, 90 for right now, 96.69. Doesn't mean we can't go blow past it if the euro gets ahead of steam, but it's 96.69. Now let's quickly move into the gold market. As I mentioned, we're going to go and be and once again, I want to go and load it up. I'm going to end up getting behind schedule here and don't want to be in the way when the ECB comes out. So gold, the February futures is trading at 1247.70, and we already said that we've got a premium of about $6. No, it's at $4.50 right now. That makes sense. Then the puts at 47. Yeah, so 47.80, 50 cents, 47.95. So right about $4.50. So the difference is now we'll start looking at this from a the XAU versus the actual gold futures, but we'll always keep in tune as to what the spread is between the spot and the futures front month contract. So looking at here, resistance in the XAU is going to be 1246. And let's go and update this. I need to change this to XAU. And we said about $4.50. That works out to be about $12.50.5. And then for support, and like I said, we're not spending a whole lot of time because I want to go on and get done before ECB and before yesterday. I think I had Dale running. I went over the time limit, not very much, but I don't want to be in the way. It's going to come in at 12.35. You can see it right there, 12.35 for right now. We know 1238 was big on the futures on a daily. So let's $4.50. Let's call that 1233 on the daily. And 1235. And that's the XAU. 30-year bonds. Here we go. I'm going to call it right there, 43.13. Well, we had 42.15 and the low's been 42.16. We'll keep that 42.15. And let's take a look at the buns. Resistance is going to be right there at 63.01. You know, if the ECB were to make any kind of a remarks, we could really fly on this thing to the downside. So just in case, we'll go with 62.40, but actually could even push even further than that if the ECB were to surprise. I don't think they will. 62.40, 63.01. And we're going to, just for clarification, we're going to call this a German 30. Because there is a little bit of a difference that spread between that and the DAX. So just so that everybody's aware. Resistance, if we get a good news, is going to be 11.061. With support coming in, how much time do we have left? Got a couple of minutes. 10.793. There we go. And here's the bias chart. And I'll go on and get out of here before ECB. And thanks for joining us here on the Morning Edge European Crossover Webinar.